I know several people that are doing, sort of their hobbies online or selling things online or, just having a second source of income. And some of them are physically making things like that, and some are not. So it's really just having, a side income to be able to collect while you're working during the day, et cetera. It's good to have multiple sources of income. It's good, just like we do in retirement, right? And so in retirement, you have money from hopefully Social Security, some from pensions, some from investments, just different sources of income because you have to spend cash. So, having the cash flow matters.
Welcome to a Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Shawna Theriault.
Morning.
Hey, good morning. How are you?
Excellent. How are you?
Good. Are you like a normal regular now on the podcast?
I feel like it. It seems that way. I think that was the goal, right?
You had this big life event recently.
I did.
So tell me, you dropped your daughter off
at college.
So tell me about that experience.
Well, I think I was mentally prepared for that, probably. I'd been expecting it, obviously, for a year, but it was interesting. It was fun. It was just the two of us. We went the day before and had some time together. Of course, showed up to the apartment and it was not clean. So we cleaned and did all the things. The
school apartment?
Yes.
Dorm?
Dorm, yes. Yeah. So just, I guess that's what I should have expected, but it was fun setting it all up and sad saying goodbye, but she seems really happy. So I'm happy for her. I'm proud of her.
So tell me, there was a LinkedIn post. So you've made this public.
I have.
Tell me about your goals when you drove away, what you were thinking.
Oh, so I was the first person in my family to get a college degree. So I have an undergrad and a master's, but we just weren't raised to go to college. I guess we just worked, and so I put myself through college, and I had made a decision when I was very young at 15, 16, that I was not going to carry the same path as my family. And so I really set out to build myself, go to college, work myself way up in the industry. I found finance. I fell in love with it. And my goal was to never have my children in the same situation that I was in. And I don't blame my parents. They did what their parents did. So again, this is not like a bash my parents, but I wanted something different for my life, and I wanted something different for my kids. And so dropping her off at college was very surreal.
Yeah.
Because I was actually fulfilling part of that. And I could actually, get her to college, living in an apartment, fully paid for, with a car, and she is completely set up.
That's
so
awesome.
That was really cool.
Because that was one of your goals.
It was one of my goals.
Your kids are going to go to college.
That's right. They're going to go to college and they're not going to struggle.
And she went under different circumstances than how you got to college.
She did. But she actually graduated. I graduated high school a year early so that I could work full time and start changing my life and changing the path of my life. She graduated a year early intentionally so that she wants to go in the medical field, and she knows she's going to have a lot of college, which is awesome. Like nobody in my family's doctors or physicians or nurses or anything. And that's her dream. I didn't, that's something she wants to do. And so she graduated early to spearhead that and start earlier.
That's awesome.
So she graduated a year early, just like mom. She started with 16 credit hours in college already. So, she's going to start her life. So
you put yourself through college, you could put yourself through master's.
Did.
Then you got your CFP. Then you got your CPA, and then you did the CDFA. Probably some more in there we haven't discussed yet, but Shawna loves tests, evidently.
Well, each of them were a stepping stone, though. And so I started in finance when I was 18. And so I was doing night school, but I was also cleaning houses at nights and on the weekends. And so there was a time where I had 3 jobs to pay for my own. I moved out when I was 16 and got my first apartment when I was 18. And so I have worked my way through all the ranks. And so, I was in finance, and then I hit a glass ceiling. I had a certified financial planner designation, but I couldn't move anywhere forward because I didn't have a degree. And I was like, that's it. I'm tired of people telling me I can't, because I definitely can.
Yeah.
So I went and did my degree, then did the CPA, and then the master's, you have to have more credit hours. So it wasn't like I'm going to set out and do, it was a stepping stone to each time. Okay, that's how you build yourself, right? That's how you set small goals and get to the next level. And then, okay, what's next and what's next and what's next? And so I just stepped through all that the whole time, leaning on mentors, leaning on, people that helped me along the way. But I asked questions. I was hungry. I wanted to understand,
sure.
And so I had so many people help me along the way, and I still do. Right. And so, but I seek that out. So I'm like, how can I grow to the next level, and what can I do next? And so
when we were going through the interview process, which seems like forever ago now, I asked you what your story was. And what's interesting is, and I'm talking to our listeners, is that there's a lot of smart people that don't have a whole lot of ambition. They never had to work hard for anything.
Yeah.
And then there's people who are average students probably, but they just have a lot of grit and work hard.
Yeah.
That's probably put myself in that category. I was okay in school but I just can outwork everybody. I have the ability to spend 20 hours on something where everybody else gives up after 3. Right. But very rarely do you find someone who has the ability to do really well in school who also has that same drive. And I was like, man, we got to get Shawna on this team. So
thank you. Thank you. It's great to be valued.
It's also a reminder that no matter what your situation is, you don't become a victim. You chose not to be a victim.
That's right.
And say, this is the way something is, and this is how my family has been and always will be.
Yeah.
You chose to do something different. And we have the same thing with a lot of our pilot clients that they sit down and they go, my family's never had this kind of money before.
Right.
Right. I'm the first one in my generation to have gone to school, to have a job like this. And so I know that they can relate to you and you can relate to them from that perspective, but not that you need to hear this from us here at Wiser, but we're certainly proud of you, and we're proud of anybody who achieves what their goals are.
Yeah.
But it's awesome to have you part of this team. And
Thank
I surprised you with this because I didn't tell you we were going to talk about this. I wanted it to be natural, for the podcast, but
I heard this podcast the other day, and one of the speakers said, if you started with nothing, that's all you ever need. I love that because that's true. Because I don't know.
I think I'm beyond that. I don't need nothing anymore.
Understand. It gives you the ability to go to, to I don't know, dig deep and go to the next level. And it's really cool though, because dropping off my daughter at school, I was able to help her with the things that I've learned to say, okay, this is when you dig deeper than deep and, go to the next level.
Right.
So
Absolutely.
It's really cool.
Well, let's drop into our topic here. We're going to talk about the benefits of diversified income streams. And no, this is not your real estate 101. Who's that guy that's always on TV? He's trying to sell the passive income. What's his name? Cardone.
Yeah.
That's his whole passive thing. It's like, anyway, that guy's intense. Let's talk about passive income. And maybe we need to start with, oh man, I totally forgot to add this. We got into your story, which is way better than this. Wiser actually was chosen for the second year in a row, the Consumer Choice Award winner for financial planning in 2025. We won this award in 2024. What happened, we get these quote awards all the time in the mail and we just throw them away because there aren't real awards. They're just like buy this great plaque that says you won an award. And so I got this email and in 24, it is like, you've won the Consumer Choice Award. And I was like, delete, whatever. Well, they had this whole ceremony and all these people were like, hundreds of people were there. Oh. And later I got an email say, sorry we missed you. And they had like the podium all set up. And I was like, what the heck is going on here? So it's a real thing. Consumer Choice Award is a real thing. Anyway,
good. So
congratulations to the Wiser team. We also had won another award recently. It has like secret shopper stuff. I talked about that on the podcast, but no, I mean, I'm so excited to have Team Wiser. The people that are here on the payroll today are, I think, in my mind, the best. I can't imagine any other firm would have anything better than what we got. I mean, we've been through some people in 24 years.
Yeah, sure.
but this group right now is by far the best, and we're seeing that in our Google reviews. We're seeing that in our these awards that we get selected for. So anyway,
it's exciting.
Go team. All right. So benefits of diversified income streams. So let's talk about that. Real estate. It could be dividend-paying stocks.
Right.
It could be
your primary job.
It could be a primary job. It could be a side job, a little kiosk at the mall or something.
All of them. Yeah.
Yeah, or a combination of all of them. It's so much about retirement and just living in general, or lifestyle, I should say, is about income. Right. And how much income can you have coming in without doing the least amount of work, I guess, is the name of the game here, right?
Well, yeah, and it's diversifying. So just like, when we talk about investing, we want to be diversified. We don't want to have all of our eggs in one basket and, invest all of our money in one stock, right? And so having diversified income gives you choices. It gives you freedom. It gives you, maybe your primary job, but it's having your money work for you. So dividend paying stocks, investing in the market, things like that, being diversified there in the market. It's potentially owning real estate. So you're cash flowing a lot of times for tax-free income, even just because of deductions, et cetera. And that's building wealth there too. And then, maybe having your primary job and then maybe even some sort of side income for you, side business, in this day and age with things being so expensive. If you picture that, you have multiple sources of income cash flowing for you. And that gives you more choices to say, okay, maybe I want to explore a new position, or maybe I want to do something different, or maybe you want to create a legacy, there's maybe you want to gift more. It gives you more options for more freedom to be able to do the things you want to do. And so, if something happens with one of the incomes, then you have the other ones helping you.
So let's talk about active versus passive income. So active income would be you're physically having to do work.
Right. Like your job, your side job potentially, unless you have people doing it for you, where you're actively investing your time and energy towards that.
And then passive income is simply, you put the work in up front, but then money starts coming in on a regular basis, right?
Exactly.
So I think the most common is going to be real estate. And I always tell people there's more work there than you think. I mean, if you start adding one rental property and then the people don't pay, that's a lot of work.
Yeah, it is.
If you have a rental property and things keep breaking, that's a lot of work, right?
Yes.
Now, if you get lucky and place is pretty sound,
you have good renters.
You have good renters. Then for a while, it'll just kind of be turnkey. Honestly, I talked about this before, but we rent our cabin out in Highlands, North Carolina, and I'd say at times it's pretty passive, quite honestly, because everything's done through Airbnb, VRBO. There's very little accounting you have to worry about. But sometimes people need something, right? Sure. And it becomes very active, very fast.
Yeah.
So I wouldn't say that, hey, I want to have 80 rental properties and they're all going to net me $1,000 to $2,000 a month, and I'm just going to be floating around in the boat somewhere. And that doesn't really happen that way. Now, you can get big enough, you can hire a manager. Obviously, maybe 80 would be able to do that.
Sure.
There's a person in Rome, I think, that has hundreds of rental properties up in Rome, and they have a whole company that manages it.
Yeah.
So I just don't think that you're going to buy all these properties and you're going to free all this. And also to risk that you're borrowing money to buy a rental property. That's leverage.
Right.
So if they don't pay and you can't cover the nut, then there's a problem.
Yeah. Negative cash flow.
Negative cash flow.
That's what you don't want.
And you can only do that for so long. So with all this comes risk. I do like real estate for certain people because when the market misbehaved, like we just went through a week in the market where that NASDAQ was down by 10%.
Yeah.
We're now back to where we were before it all started within a week. But people were panicking, saying, "This is the end of the world. This is it. The bull market's over. We're going to be everything's going to be burning."
I feel like the only people that panic are the people that the people that are in the industry. We don't panic because we're used to these normal dips. This is normal.
Right. Well, you need a healthy pullback,
right,
to get rid of the crazies out there that are leveraging to buy these things. But my point is that nobody at Wiser, but somebody liquidated that week in panic.
Yes.
Well, in real estate, it's really hard to do that. You got to put a for sale sign in your front yard. You have to have a title search. You have to do all these things, right?
Right.
So hopefully the value of the property is going up over time, but you can't hot sell your house.
Right.
Even We Buy Ugly Houses can't move that fast, right? So that is a positive thing about real estate. From that standpoint, is it's harder to make irrational decisions. Other than the purchase can be an irrational decision.
Yeah.
If you're not buying the right property. Other passive income. So we did a podcast a little while ago now, but with a gentleman that helps buy franchises. And there's a whole set of franchises that are built on initial investment, and you hire a couple of key people and it's turnkey. So that's a whole nother area of passive investing that can happen that's outside stocks and bonds.
What would you think like a minimum investment of that would be?
Well, in the interview, he said $50,000 to $100,000 is a lot of times all it's needed to get started. You have to have a lot of faith in the process because you're working for yourself, but you're not working for yourself.
Right.
You're managing someone else's brand. So there's rules. You can't go out there, if you had a bunch of Subways, you're not going to go run your own advertising. You're going to use their advertising. Right. Or if you had a creative idea for an advertising to sell more sandwiches, you're not going to be allowed to do that.
Yeah.
You have to stick to the script. So you have to buy a process that's been proven to be successful. But there's been other people we've talked out of, franchises.
Yeah.
I think one example was repairing car windows.
I'm
like, how much money can you make repairing car windows?
Glass companies?
Yeah. It's like you're the guy fixing it though. You're going from car to car to car. And it wasn't this is a job. It's not I wouldn't even call that a retirement job.
Sounds like a 1099 right. kind of contractor job.
Yeah. And maybe. Guess who you have to buy all your supplies from? You have to buy it from
them.
Yeah. From them. Yeah.
So you're really just buying the advertising.
I guess so. Well, you're buying a brand. You're buying a brand that people trust. I mean,
true.
Everyone knows about Safe Light. So if you own a Safe Light franchise, then you pick up the phone, you would call them because of all the branding.
Yeah.
Where if it was something else, maybe you wouldn't do that. What is it? Grease Monkey. So they're like popping up everywhere, but that's a franchise. Oil change.
Yeah.
Stuff like that. But, okay. So many people you blend active and passive, obviously.
Yeah.
Side jobs. Let's talk about that.
Side job. So, that's more of an active and having like a side job or a side hustle. A lot of people are doing that online now.
Yeah. Etsy.
Yeah.
We have a client that does something like that. He's making these handles for green eggs, custom handles.
Yeah.
I got one for my brother-in-law. It says Ole Miss. His daughter goes to Ole Miss.
Oh, yeah.
He can do anything.
Yeah. I know several people that are doing, sort of their hobbies online or selling things online or, just having a second source of income. And some of them are physically making things like that. And some are not. So it's really just having, a side income to be able to collect while you're working during the day, et cetera. It's good to have multiple sources of income. It's good, just like we do in retirement, right? And so in retirement, you have money from hopefully Social Security, some from pensions, some from investments, just different sources of income because you have to spend cash. Mm-hmm. So, having the cash flow matters.
So other ideas, consulting. A lot of people will do that in retirement. Sales commissions. We all have that friend who sells stuff for a commission. That's really annoying. Are you my friend? Or are you trying to sell me shampoo? Because I don't need shampoo.
Maybe you don't.
Right.
You're good with just some soap right there.
Yeah. We're approaching no soap even. I don't think, but yeah, but people do that. People, who is it? Matilda Jane. They went out of business. I know why. I know why they went out of business. Anyway, I won't get into that. But that was the rage for my daughter at a certain age.
Yeah.
And then it got even worse with Duck Dynasty because I think some of the ladies there were selling Matilda Jane also with that brand.
Oh,
it was like really big in the South. It basically, if you see a little girl running around in a dress that looks like it was made from 20 other dresses, that's a Matilda Jane outfit.
They're cute. They're cute, but yeah, they went under.
But moms would have trunk sales and sell stuff like that, which is another idea. All right, so talk to me about the characteristics of side jobs and freelancing.
Well, it's really, the characteristics, I mean, anything that's active, you know, it takes your time. Kind of the more you work, the more you earn kind of thing. So when we're talking about the active income versus passive. And so, you know, it's investing your time, it's investing your effort into, earning. And so if you stop working that job or side hustle or what have you, then the income ends. So that is, you know, a good definition of active, where it's like, it takes you and it can't just work for you when you're not there. You know, or if you stop doing it.
Yeah.
That's the difference between active and passive. Whereas passive, like real estate investments, things like, you know, stocks, bonds, things like that, you know, that is working while you just, I don't want to say set it and forget it, but it may not take as much as your effort. And, you know, it's going to keep doing what it does, whether you're actively involved or not.
So your opportunity fund, the money you put, is not nearly necessary for retirement. That is kind of your side hustle too.
Yeah.
Because it's generating income, dividends from stocks, right? Interest from savings.
Right.
We've talked about rental income already. It could be that you rent out a room. You have a apartment above your garage and you do a little Airbnb there, or you have a college student that lives there part-time, things like that. Royalties. So this is interesting. Oh yeah. We need to talk about this. I have a book idea.
Oh,
more to come. But royalties, intellectual property like books, music, patents, those are things that you can also generate income. So if you think you could write a book about something and it's really easy to get published now with Amazon, and you think that might generate some passive income, then go for it. Start writing. Donald Miller, if you want a writing course, look up Donald Miller's writing course. That's a great great course on how to write a book.
Well, then they also have ghostwriters that will help you, right?
Yeah, true. I feel like that's cheating, but I'd probably totally hire a ghostwriter.
Well, it still takes your ideas.
I'm hire you to write my book.
That's going to be my next passive income.
Right. Exactly.
No, I guess that would be active income because I would be actually writing it, right?
There's online businesses. So revenue from blogs. That's a real thing.
Huge.
You get enough followers, right?
Right.
E-commerce stores. You can have your own Amazon store. Like you can pick all your favorite stuff on Amazon, but people come and buy it from your place.
Right.
Then you get a commission. So that's for the influencers.
Right.
I don't know if we have any influencers listening, but if you're an influencer and you say, I like this product, then they can go to the Amazon store and buy that, which is interesting.
It's like it's a whole thing where you can post about different things that you're wearing or using or what have you.
I've done that before. Like long story, but something car related. And I was trying to figure out something and I figured it out for this guy's YouTube channel. And I went to his Amazon store and I bought the little device that I needed. Yeah. Because I was like, well, he should get rewarded because he did the video and he saved me hours.
Right.
So
no, completely. There's some that I follow that, you know, there's a lot of them where it's like finding the great deals for like moms, you know, where it's like stuff for the kids or outfits or what have you. And so they put it together and you really like these people and you know, not that you want to copy exactly what they're doing, but they kind of search out the deals for you. And it's like, oh, because in a world of Amazon, there's bazillions of choices. So it's kind of like boop, boop, boop. Okay, she's already vetted this out and it's good.
How's it go?
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
Yeah, so I want to start like a Wiser swag store. I think we could sell pretty well.
What would it include?
Well, you have a trucker hat, you have a ball cap hat.
Yeah,
we have a lot of aviators here, so I think we
That's
have like
true.
an aviation themed something with the owl or something like that, right?
Yeah,
we just have t-shirts, sweatshirts.
Nice.
You know?
Yeah.
But I keep saying this stuff, and people go, "Uh huh." But it doesn't happen.
So are you wanting me to make it happen?
No, that's not your job. No. I just look at Hadley and Alexa and I'm like, we need a swag store. And they just like go, and then they walk away. And I'm like, when's somebody going to take me seriously on the swag store? If you're listening to this and you would get some Wiser swag, please email hadley@wiserinvestor.com.
Hopefully it gets blown up and your idea goes viral.
That's right. Maybe she just needs like 100 emails. We can do that. That's a very small percentage of our listeners. We can get 100 emails to Hadley. So we need a Wiser swag store.
If it was Lululemon, I'd be like, yes.
Oh, good gosh. We'd have to buy it from Lululemon at retail, then put a logo on it, and nobody's.
That's what I got.
Yeah, that's a different story. It have to be like Land's End. So anyway, again, I think I said at the beginning of this, we're not like Grant Cardone here. We're gonna tell you how to 100x your side hustle and make it your primary hustle. That's not what we're trying to do. But I think today was just about, let's give you some ideas. If you're looking to do something on the side or do nothing on the side, that's always good. I just have the inability to sit. And so I'm always just tinkering and doing things and thinking. And even when I was flying airplanes, I stopped in 2014, but so a long time ago, I was thinking about this. And this, I still only think about this. I don't have any side hustles other than my kids, but that costs money. That's not income generating.
Now,
right?
Maybe. Hopefully they start supporting themselves, right? At some point.
One has a chance. The other one, not so much. She's very expensive. Anyway, so how do you start diversifying your income? I think you learn, you keep learning, you explore ideas. It's just something you have to be passionate about.
Right. Something that you come across that you love, that you're passionate about. Also investing, always start investing as soon as possible. So you're working, you're hopefully deferring to your 401k. And then after the emergency fund, paying off debt, starting that opportunistic fund. And that's where you can start really playing, and you can build your opportunistic fund quicker if you do have some sort of side income or side hustle that obviously wouldn't take you away from your primary source of income. But, if it's someone who's driven such as yourself that, can't sit still, then what better way to use your time instead of, sitting, or you guess you can't sit still, than to do something that you love doing that could help you earn additional money too, potentially.
There could be a whole podcast just on this next statement I'm about to make. But we hear it so often. I want to start a business so I can reduce my taxes.
Yes. Which doesn't make sense to me.
No, I want to start a business so I can lose money and write it off. Why would you do that?
If you're profitable, you're going to be taxed more.
Right.
Which is a good thing. I mean, it's not
if you're taking
taxed,
all the normal deductions,
right,
and you still find yourself in the 37+% tax bracket,
that's great.
Congratulations. You've reached the American dream.
Right.
You're better than 93% of the country as far as income generation.
Right.
So it's so frustrating. This mindset and this, it's just this mindset of I having to pay all this tax, so I'm going to lose. Yeah, I don't know. I'm struggling for words because I know that there's a lot of people listening who think that, and I don't want to insult you. but if you get taxed at 37%, if you have a business idea and it's successful, that's great. Or even if you don't make $1 million a year at it, even if you made $50,000 a year, that's pretty good, right? But the additional tax that you're paying is because you've made more money. As long as you have a good CPA and you can write off things,
right,
that's fine. But we don't need to create businesses to lose money.
Right. Well, that's a hobby loss anyway, eventually.
Well, after 3 years,
correct,
if you don't show a profit, yes, you run into a problem of that.
So, and that's what I don't know that people can actually picture what it looks like on a tax return. So when you're saying that, I'm actually picturing like what it looks like on a tax return. You have your W-2 income.
Yeah.
And then separately, you have deductions, on a whole separate schedule that are just your normal deductions that you're referring to. But then you have, and now your W-2 income is after everything, like your medical, and if you're deferring to
HSA,
tax deferred, right? Exactly. So then that's on so that net number that you're taxed on is on your 1040. And then you have your business income. Either it's a profit or a loss, right? Mm-hmm. So they don't intertwine. I mean, you can take a loss potentially if you're an active participant against your other, but you have that hobby loss issue. So the play here is that, and even when you have real estate, you can't net that passive income against your W-2 unless you're a real estate professional. There's other nuances too, but if you're in the highest tax bracket, and even if it's a short-term rental, there's income limitations to do that. So
every year our rental has a loss.
Yeah.
It does not offset.
It's suspended and stays with it.
It stays inside that LLC.
Right.
It gets added to the basis.
Right.
Right. Now, if I sell it, I have to remove the depreciation. It only loses money because of depreciation. But what it does do is it allows for income to come in
tax-free,
right, to cover the operating costs of the home.
Right. Same with the business. Same concept.
Yep.
And so, you have income and you have expenses. Now, there could be some expenses that you are incurring right now as a W-2 employee, meaning like stuff in your home that you're not using, like a home office and phone and, certain things that you could run through the business because they are being used for business expenses now.
Like a car.
Right. And so, so if you had your own business, so some of the things that you're doing but you're still incurring additional expenses and you're working. It still takes your time and your effort, which it could be a good thing because maybe you decide you want to do this business and retire from the W-2 and you want to do this in retirement because you just love doing it. And maybe it can't pay you enough or doesn't pay you enough to fulfill all of your goals. But in retirement, it's something for you to do when things ramp down a little bit. So it just depends on what it is your goals are. But to your point, it's not going to be like you're going to have this whole thing that's like a loss that you're going to offset this W-2 income.
Correct.
This is not going to happen.
No, but I don't think CPAs are lying, but I see how it goes down. Mr. CPA, did you deduct all my work expenses? Oh yes, I deducted all these side hustle expenses. Go great. And then they go away and they think that they got deducted. It got deducted versus the income for your side hustle.
Right.
So your side hustle didn't make any money.
Right.
But you just did all that hustling. You got $1,000. You wrote off $5,000. And where did that get you?
Right.
So you have to be something, if it's something you're passionate about and you're doing it anyway, and you formed an LLC for liability reasons, or you just need to be a sole proprietor, whatever, that's fine. If it's something you're passionate about doing.
Yeah.
But you can't, you're not going to offset your W-2 wages, which is what everybody's trying to accomplish.
Now you could be earning this income and then having expenses offset it that you were incurring that, like phone things we talked about that you're incurring anyway in the partial deduction for the house.
True.
That can bite you though, when you're doing the house office deduction. So you have to make sure that you're doing that properly. Because when you go to sell that house, you have to recapture that. So, I mean, that portion is carved out for business. It's a totally different deal.
Right. Well, hopefully you wouldn't have to sell the house and you could do a 1031 exchange and roll it into a different property, but that's a whole different podcast. We have lots of podcasts on that, but we'll go and wrap this one up. That got kind of heavy there at the end, but that's something that I just thought about as we were chatting, is that, we hear that so often and that's not really the case. So, all right. A couple of things. Does inheritance count as income? Inheritance is not passive income. That's a one-time, that's a one-time gift. Typically, we have that on our YouTube channel. Pros and cons of owning vacation rental property. I did that one, I think. That's also on our YouTube channel, A Wiser Retirement. You can listen to podcast episode 221, How to Prioritize Financial Goals. If you need help setting goals, Shawna's a great person to talk to. She's a great goal conqueror.
Thank you.
Thanks for listening to today's episode. If you're interested in learning more about Wiser Wealth Management or want to schedule a consultation to meet with one of our fiduciary financial advisors, you can do so by going to wiserinvestor.com, or you can click on the episode notes. Thanks, guys. We'll see you next week.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced by Rachel Dotson. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.